Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house. Oh yeah, yeah. Let's get some noise in this house.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me is me. If you're doing this for the women you losing, do this shit for yourself. I do this shit for myself.
Style is the bomb, daddy bomb.
Real man of genius.
Today we salute you, Mr. Daily Profiler Statistician.
Mr. Daily Profiler Statman.
While others guess where the market might go, you crunch the numbers, projecting highs and lows with surgical precision.
The high of day, low of day, you've got them dialed in.
London Open, you've measured it New York over under. You've tested it Asia range. You've logged every tick since 2018.
No lagging indicators for this guy.
Only you can say, based on the last 47 days, there's a 63% chance the high of the day forms before 11 a.m.
Probability never sounded so
Crack open a cold one, because trading isn't luck, it's statistics and a really big spreadsheet. It's Mr. Daily Profiler Stockman.
All right. Good morning, everybody. Good morning. Good morning. Good morning. As Carl says it here, good morning, Rat Pack. What's up? What's up? Good morning, everybody. Got a good chunk of people here starting out. Hey, real quick, I got a goal this morning. I want to break 100 live viewers. I think we've consistently been doing that. I want to keep this goal every live stream. So as always, if you all get any value from this stream, if you like coming to these streams every Monday when we do this, the only thing I really ask is just share this with anybody. Share this with anybody that you think would gain value from it. Obviously, drop it a like. I post these tweets every single Monday. If, at the bare minimum, you could go to the Twitter, tweet, X, whatever the heck you want to call it, and just help retweet, get the stream out there. And let's see if we can get another 100 live viewers during the stream today. I see a lot of familiar faces in here. I see some new faces in here. Good morning, Divergent here. Good morning, good morning. Aster, good morning. EP, good morning. Trey, good morning. Trades by, I don't think I've seen you here before. Trades by Bruno Forte. Bruno. All right, we got to put some like underscores or something in here, man. Either way, good morning. Morning, Landy. Good morning, Jeff. What up, Chitaki? Good morning, good morning. Let's get some noise in this house, baby. Hey, speaking of that, let's get some music here. Let's get some background music going. So that way it's not dead quiet. There we go. Look how professional we're getting. Good morning, Scotty. Good morning, good morning. Morning, Wes. Carl, hope the move is going well. Good morning. Hey, and while we're sitting here, about to get into some analysis as you're coming in, drop in the chat where you're watching from. I think this is one thing we always try to ask every Monday is we're really curious to see like where is everybody coming in from that is trying to do this crazy difficult thing called day trading. So I always love to see like, dude, we got people in Australia, Canada, New Zealand, Germany, Mexico. We got people from everywhere, bro. And then all the people in America. I mean, we got people from coast to coast. We got Diddy in here. What's up, Diddy? Good morning, good morning. We got Jeff, Maz King. What up, what up? Don't be a hoe, share the show. All right. I like it. I dig it, I dig it. All right. I'm going to shout you guys out. Just drop in the chat. Like I said, where are you watching from? Okay. Let's get into what we're seeing. So always, first thing that I'm doing when I open up the chart in the mornings, when I'm getting ready to see what I want to do for the day, is I want to see with this daily candle, the thing that we're trying to trade every single day as day traders, we are trying to trade the fluctuation of this daily candle bouncing around, right? Right now, the open is here. So the daily candle looks something like this. Here's the high to the low. That's the wick. And the body is currently right here. So this is how the daily candle currently looks, right? We got the wick on both sides, the body, the open, the current bid and the ask. And this is how the candle looks. Just like if I were to go to a 1 minute time frame, I can do it right now. And we can watch this 1 minute candle bounce and go from bullish to bearish, bearish to bullish. We still have 50 seconds left for this 1 minute candle to decide, does it want to close bearish, right? Does it want to keep on making the body like what it's doing now, or is this the wick that we're making, and then it comes back to the other side to make the wick to the upside, and maybe it closes bullish? Or do we continue making a bearish candle, making the body? It's exactly what we do as day traders every single day, trading this daily candle. Is we're trading the bouncing effect, the fluctuation, whatever you want to call it. We're trading this daily candle from deciding, does it want to keep on being the body and we're just going to keep on going lower and lower and lower? And from a daily candle perspective, we're just in the body right now. Or are we in the wick, okay, where we're close to the lower portion of this daily candle? And are we going to try to trade with the daily candle doing this right here, where it comes back up, and maybe we retest the opening price, and we want to see, is this going to be a bullish close with a huge doji, or is it going to just be a retest and we're going to keep on going lower, 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 and we're making the full body? Okay, this is what we do every single day as day traders. So with that being said, the first thing that I care about is where's the highs and lows of this daily candle, and in relation to, are we statistically correct or statistically incorrect in terms of where the high and low a day is? Well, right now we can see that, and these are the 4 major times that we make the highs and lows. I can pull up the daily profiler here. Let me change my screens. There we go. So now you should be able to see the daily profiler on our screen. So you can see that no matter, if I go to the daily profiler dashboard here, and if I just click everything, so in the past 4,045, we almost have 4,500 days worth of NASDAQ. No matter what we've done in the overnight session, we can see right here the highs and the lows of days. Okay, so if you guys are coming here for the first time and you don't get any other value from this, take this away. Statistically, we're going to make high and the low of day in 4 major times. And then we can even take a screenshot of this. And I'll show you guys how I apply live price to statistics on the chart. So this is the statistical component. Okay, this right here. This high and low of day, this is the statistical component. When we say aligning live price statistics, this is exactly what we mean. We're going to copy this and we're going to paste it on my chart. So if I know that between 1800 check this out here. I'm trying to get fancy with it here. Watch this. Boom, look at that. 1800, 3 a.m., market open, and market close. These are the 4 major times. Now, one exception that you'll notice on the chart here is this little uptick right here, and this is 8:30. If I go to the daily profiler, you can even see here, if I hover over it, 8:30, 8:45. Now, contextually, you would ask yourself, well, why? Why is this time right here and a random uptick? Because of news, right? We have a lot of news events around 8:30, CPI, PPI. Canada does a bunch of stuff. There's a lot of real estate news around 8:30, 8:45. Like, you'll see a lot of high impact events happen around 8:30. And so when we have those high impact days, right? Like today we don't have any news at 8:30, but when we do have those high impact days at 8:30 that are sometimes the high and low of day, well, you'll even see it. You'll see like a spike where, if I go to the chart here, you'll see a spike sometimes where 8:30 will just come down and do this boom, and then that'll be the low of day. So that is what you're seeing visually. This is why I love using statistics so much, because if you were a brand new person and I were just to tell you, hey man, hey bro, trust me, on news days we make the high low day, trust me, that there is no tangible number, right? I'm just saying, trust me. Here you can now see this, right? We don't have to run numbers anymore. We don't have to run another Excel spreadsheet. You can visually see through statistics, objectivity, that this is in fact a valid thing, that when we have an 8:30 news event, this is why. This is a contributor for highs and lows of days. Because I beat that dead horse enough, I want to see what high and what low have we currently made in the daily candle, and how does this relate to what statistically we do. Well, I can see that this is an in-stat high of day, because we're in that 4 major time period. And then this low of day we have right here, this is an out of statistic low of day. We do not typically make a low of day at 0:35, right? Midnight. So if I know that, going back here, if I know that this midnight time that we have, this 0:30 time period, is a very low chance, very low probability of making a low of day, well, then what does that look like in relation to where live price is? This is where we get into the next portion. We don't just marry what spreadsheets tell us. We let the spreadsheets tell us what the expectation of price could be for that day, but then we let live price agree or disagree. So we look at the market here, and we can see that this is the P12, and I can even turn on the daily profiler on my chart, and you guys can see it even better. So this is the P12 high. This is the P12 low, the first 12 hours of the daily candle. This first 12 hours of the daily candle is going to be the first half. And so in the first half of this daily candle, if we can't even come up to test this P12 mid, if live price has been doing nothing but making bearish hourly candles, okay, in this pre-market, we made a bearish hourly 6 a.m. candle, a bearish hourly 7 a.m. candle, and then going into this 8 o'clock candle right here, we have 8 o'clock we have the Q1 low in the 8 o'clock hour, moving into 9 o'clock, and we have a Q2 high. So we're actually due for a new high in Q3 to Q4 the 8 o'clock hour to make this New York one a long. But either way, we've been selling off in the pre-market with no motivation to retest this P12 mid. Well, we know going to the daily profiler here, and because Mickey isn't able to make it here, so we're going to go super in depth. We got plenty of time until market open to show you guys this. If we go into the daily profiler, and we can see that either this P12 low or this P12 mid, one of these statistically are going to get hit, right? We don't typically just range in between the P12 range. So if now I want to get even more specific to the day, well, we're short, true, none for Asia, short, true, and then none for Asia, meaning we haven't broken the midpoint. And then for London, we're short, true, none. Now here's something I do a little bit different for the pack members and the bootcamp members watching this. We're not true. We're none for London, but you can see the London OU is right here. Now the London OU is on the warpath of just a natural mean reversion of a lot of these statistics that are stacking above price. And so guess what I'm going to do? I'm going to forward plan for London being broken, because it is higher that London gets broken than it doesn't. So I'm going to add broken to London, because this is just the natural warpath of a lot of statistics that we could come and visit. We have all these bullish retracement levels here. We have opening prices 1 through 7 a.m. above. We have P12 mid above. So we have a lot of reasons for, at a minimum, us to make some sort of bullish mean reversion to these statistics. And London OU is the natural area in this direction. So I'm going to account for London being broken. Okay. And so then I'm going to war game New York 1, which is the AM session here, the one that we're looking at. And we're going to war game all the different possibilities that price can go with statistics. And we're going to see what live price component matches the statistics for the day. So live price, and when we say live price, we mean the P12. The P12 is this range right here. And then the other major live price component is market open. So the first thing we want to see is, how is the live price, this bid and ask, and where these candles are being printed, where is this in relation to the P12 interacted well? If we haven't even failed to take the P12 mid, and we're then coming down to take this P12 low, Well, what's the statistics of taking that P12 low? Daily New York levels, P12 levels. We see that the P12 low and the P12 mid, they both have very high hit rates, but between what times are these hit rates the majority of the lead contributor of this 82%, the lead contributor of this 94%? Well, we can see that for where live is currently at, one of these are going to get hit most likely. So we can see with the P12 mid, if we go long for New York 1, and then we start mean reverting those statistics before market open, we can see that if we haven't hit the P12 mid around the morning session, around 6 to 7 o'clock time, which we haven't, then the next major time for us to anticipate P12 mid being hit is around market open. We can see this huge uptick at market open, and then we dramatically fall off by 10:45, 10:30, 10:45, this time period right here. So translating that to the chart, from 9:30 to 10 o'clock, 10:30 right here, this 1 hour time period is basically like an expiration. Okay, just like if you go to the store and you buy a product and it has expiration date, this P12 mid, while it has a high strike rate, it has a high probability of being hit. This high strike rate expires by 10:30. The majority of the time that we take this P12 mid, it expires by 10:30. And so then for the other side of the coin, we also know this to be true for the P12 low. It's the same thing. We have a high strike rate for the P12 low, but then look at where it drops off. We drop off dramatically by 10 o'clock. So we know by 10 o'clock, just building our chart here and building where price could go and the expirations for it to go is around 10 to 10:30 for the P12 mid and around 9:45 to 10 for the P12 low. So this tells us one of two things. This tells us if we go long, meaning we take this high that we're about to go long for New York 1. If we do this movement, then we're going to be leaving this low open and this out of statistic low, which is statistically, we do not make a low at 0.35. And then we also don't go true in New York 1. We typically go false for New York 1, meaning if I show you the statistic right here, false, meaning we go 60, and there's actually a 69.1% probability that we go false specifically for today. If we go long, meaning we take out this low. To go false, we just take out the opposite side of the New York 1 range. So if we take out the New York 1 high, then we're leaving the New York 1 low open to most likely get retraced back into. And so then if that's the case, then we can see that this would make the most for us to take this New York 1 high, maybe retrace these statistics as much as we can, if not the P12 mid, going into that 9:30 to 10 o'clock time frame. And then the opposite side, we take the other side of these statistics for the rest of the day. So then how does this lead into my trade ideas and what I see for the day? So I went super in depth and granular into a lot of the things we look at, but in a very simple, 2 sentences of what I want to see. The first major trade idea is if we come up and go long out of New York 1, retrace a lot of these statistics in the pre-market, I'm looking for extended cash flow shorts to the downside below market open. If we open up the market somewhere at or near the P12 mid, I'll be looking for cash flow shorts for a new statistic low of day, and then cash flow longs for if we do want to attempt to come up here and retrace settlement in the Globex open. The other side of the coin, if we go false in the market, so we come up, take the New York 1 high, then immediately crash back down, then we'll be leaving all sticks to the upside. And this is where I'll be paying attention to my high day and low a day distributions. So if we come up like this, and then we start coming down immediately, we don't do any of these statistics here, then I'm going to be looking at the market open. If the market opens something like this, break to the downside would tell me continuation shorts and we're most likely in a long false scenario. Long false scenario gives us this high of day right here, and then the low of day by 11 to 11:15, which is this L/F. And then the long true scenario gets us high of day at 12:45 to 1300. So we're going to just be patient. We're going to see what we do, see if we go true or false. If we leave this false open, I'm even more anticipating a potential reversion to the downside to get a new low of day. But then if we come in the pre-market to take that low, open up the market at low of day, this is my bread and butter trade. So I'm actually pretty excited for this morning, because either way, if we continue to the upside, we're going to leave a lot of opportunity to potentially short here. If we take this downside movement in the pre-market, we're leaving a lot of opportunity for extended cash flow longs up here. So I think this morning's shaping up to be pretty good. And that is my in-depth analysis for you guys this morning. If y'all have any questions, another reason why we do these Monday streams, if y'all have any questions every single week, if it's not a holiday, you all have at least one opportunity that if you're on the free side, if you're trying to see and understand what we do, I know it's a lot and it's different than what a lot of people usually see, but makes sense to me, and it gives me peace on the charts. And so I know for analytical people like myself, if you align with that, maybe this is something you can look at, and you can come every single week and ask, why do I do this? Why do I look at that? Why am I caring about that level? Or, what's that box? Anything. All right. Who we all got here? We got people from all around the world. We got WP Capital from Germany. We got Tai Fong from Malaysia. What's up, Tai Fong? We got Shane from the Caribbean. We got Bruno in Brazil. We got two people from Germany. We got Chitaki from Japan. Dusky is actually watching from my house because he's on my Wi-Fi. We got ER from Spain. Scotty from UK. We got a ton of people from the UK. We got Josh, Twist, Scotty. We got another Scott in the UK, or from the UK, but he's living in Canada. I think that's what it is. We got a bunch of people from the UK. So we got Stan's in the UK. What up? Good morning. You guys like our Nightbot? Want to be called an F-tard until you're profitable? Dude, telling you guys, we're not the best at marketing, but we are authentic. We got Carl currently at the Southern California mountaintop compound, relocating to Maui, baby. I'm excited for you, Carl. I think you're going to love it. I loved Hawaii when I went. Peachwall mid is so nice with these stats. Yeah, Trey. I mean, this is what I was about to say earlier. This is my bread and butter. Like, I get excited about moments like this. How many times have you all seen? I'm going to sound like a broken record, but it's just the God's honest truth. How many times have you all seen directional overnight movements, and then we just retrace the entire move in the New York session? Whenever, like, I don't know what it is about human psychology. We'll see this. We'll see these overnight sessions like this, and we'll just immediately agree with the overnight. We'll say, okay, well, the overnight looks super bearish, and we're making down movements, and so now I'm bearish in the market. But it's just not the case. So many times we make a low of day at market open, and then retrace the whole thing, making this instat low. And then we take statistics to the upside. So that's why I never let this overnight movement like this, I never let this scare me. And this is another reason why statistics and using some sort of statistics, no matter if you're a discretionary price action trader, no matter if you're a pattern trader, ICT trader, supply and resistance or supply and demand trader, volume profile trader, dude, it doesn't matter. Harmonics, oscillators, if you use RSI and all that stuff, it doesn't matter. If you just use statistics to give you a reasonable expectation of where price would go and where it goes more often than not, and then when live price agrees in that direction, you now have a quantifiable reason to be confident. You're not just, going off of memory or going off of experience alone. Like, you're actually using numbers that are your feelings, or also prove your feelings wrong, right? Because we always demonize feelings. We always say it's bad to use your feelings for XYZ, but sometimes you have really good, valuable intuition from this market because you guys see this every single day, but it still helps to put a number to it, right? Because if you're trading and you've been trading for years on years, and you're like, dude, I know that, I don't know what to call it, but we just move in this direction at this time almost every single day. Well, you could be right. You could have that feeling of being right, but wouldn't it be even better to have an actual number? Wouldn't it be better to say, okay, well, instead of me just thinking it's going to, taking this high by this time, I can actually put a couple objective labels to it. I can say, well, instead of just this arbitrary high, we take this P12 mid around 80% of the time between 6 a.m. to noon. Between 6 a.m. to noon, 80% of the time, if we haven't taken this P12 mid, we're going to. And so then how does that look with the live price of the day? Well, live price of day tells us that if statistically we go false for New York 1 and we come down here to make this low of day, if we break above market open, live price has now turned on this probability. It's like a light switch, because what is market open? I said this to, I think, Stacks. I don't know if you're in here, Stacks. Stacks is one of the boot camp members of this current boot camp that we're in right now. And again, if you want to join the boot camp, we're opening up another boot camp in January. QR code is on the top left if you want to scan to join. And I told Stacks, I said, listen, think about the RTH as just an auction, because that's all it is. It is the start of the regular trading hours day. It is the start of when anybody and everybody that wants to buy regular stocks, you want to trade and buy and sell options, all this stuff is available at RTH. Okay, so everybody in the financial market can now participate at 9:30. So at 9:30, when the whole market is now alive, objectively, if that candle closes above or below the 9:30 open, you are objectively accept. We could chop around it. Absolutely. Absolutely. We could chop around it and we can go above, below, above, below. But we don't typically do. Typically, market open is the pivot of the day. And you guys can even see this. I can just zoom out and check this out. I mean, you don't have to believe me. We don't do none of that trust me bro stuff here. We can just see, right? This zone right here, this gray box is market open. This is the high and the low of market open. Look, we typically expand away from market open most days. Here's market open, expand away. Market open, expand away. Market open, expand away. Market open, we expanded a little bit, then chopped around. This is a real reality. Sometimes we do. Market open, expand away. Market open, expand away. Market open, expand away. So market open is a major, major pivot of most days. Why? Because it's just the auction. I can't tell you the exact formula. I can't tell you why the market wiggles, because I don't have enough money to care. But I can tell you statistically, the measurements off of market open are very consistent. Why? Because we expand off of it more than we don't. Same thing for the reason why we retrace to these areas more than we don't. It's just objective facts. So when I have the P12 mid, going back to this comment by Trey, When I have the P12 mid and we haven't retraced it in the pre-mark we have today, we make a new low of day at market open and then get back above market open. This is the bread and butter trade I will always take no matter what. Because this, I call it floating. When P12 mid is floating above live price like this, all I have to do now is let live price agree. And by this point, live price would just need to go false for New York 1, make a new low of day, break above. All right, we got Alpha Profits from Cambodia. What's up, dude? Do you track stats for daily settlements? MP, I don't personally, but guess what? We have this cool tool here called the Daily Profiler, and I can show you. So if you wanted to see, I don't know, if you want to see the statistics of, if what you're asking is you just want to generically see the stats of the settlement, we can go over here to daily levels. So this is everything. So in the past 4,499 days of NASDAQ, this is settlement right here. So generically, we retrace settlements around 60% of the time, with market open being the lead contributor. Around market open to 10:30, 10:15 is when we drop off that statistic. If you want to see, and then this is where conditional statistics really make me excited. Hey, we got 81 people watching. Again, if you guys find value in these streams, please, all that we ask is just like it and spread it with one person. Share this link, click the share button, or if you go to Twitter, you can retweet my tweet about sharing it, whatever you want to do. We're trying to get realistic trading out there to as many people as we can, give people peace on the charts that align with what we do. All right. So we got 81 people. I try to every stream get to at least 100 live streamers. So let's see if we get to at least 100 today. It's pretty cool if we do. But no, so for tracking the daily settlement, not only do we have this generic statistic, but then conditionally, what conditions align to give us even higher odds of getting settlement to be hit, right? Because we can see right here, generically, we have a 60.35%. But then today, with what we've done in Asia and London, and now going into New York, where we're now long for New York, look at this. Watch this. I click long, updates, and then we go over here to daily profiler levels. Now we can see with this specific configuration and this many days aligning with this configuration, 66% of the time we've hit settlement in this configuration. And then of this configuration, again, the time doesn't really change that much. We can see this significantly drops off by 10:15 to 10:30. And so we can then use this. I'm glad NP asked this question, translating this to the chart. Well, if we know that 10:15 to 10:30 is the final countdown, like the music, it's the final countdown, right? Is the final countdown, that by 10:30 to 10:45, this time period right here, if we still haven't made our way to settlement and Globex right here, and we start continuing to the downside, we can basically eliminate this portion of the chart and say, hey, the highs of day is most likely in. Price is most likely not coming back to this area because we've fallen off dramatically now by the time period to do so. And so we can now have a good assumption that if live price is being accepted below market open, we definitely do not even need to be worried about this. But even if we are being accepted above market open, I know as a day trader, my edge is not in targeting to the moon. I could be wrong. Could 100% be wrong, but the probabilities are telling me that more often than not, even if we break above market open, I need to have realistic expectations for the fact that we may not get all the way up here. If we break above market open, maybe I can get still something like this, but my expectation for price to come here by after 10:30 to 10:45 is a lot less likely. So if by 10:30, 10:45, if we're still above market open, but we're struggling to even get to Asia OU, I can have a very good assumption. Again, assumptions are wrong. We're not predicting. We're just saying the most probable scenario is that we don't come back up settlement. And so I can eliminate this off my chart by saying that even if I'm in a trade or if I'm targeting for a TP, whatever the case may be, my expectation should not be up here. It should be somewhere more realistic. And that, my friends, is what makes day trading with statistics so valuable. It's not because we can predict what the market's going to do. It's not that we have some crystal ball or something like that that's giving us these secret answers to the market. It's nothing like that. It's aligning with just what does price do more often than not, and we allow those more often than not scenarios to bleed into our decision making. And so that way we have realistic expectations. You will even see me many times be wrong about so many things. You'll see me be wrong about, I'll be like, okay, statistics is only telling you price will do this. And so then I target this, and then we blast off like Jimmy Neutron going to the freaking moon. It happens. It's called variance. It's because we have things that statistically tell us we operate in this box, and then variance sometimes has us falling off the lower end, but then sometimes blasting off to the freaking end of the earth. So it really is that's why we use statistics to say, hey, yes, we have this scenario, but we also have this scenario. And we just let statistics tell us what to expect most of the time to have a good, reasonable expectation. And then we just let the rest be the math. We let the math take care of the times where variance doesn't even get us to the what we commonly do. But then the other times we let the math tell us, hey, even when we do get these crazy moves like this, we got enough of the move. We're happy with enough. Uh-oh. I think my signal was going low here. I think we're good though. Let me play my stream on a phone. Let me make sure I'm coming in.
You're good. It was a very momentary lapse. I can't speak.
Oh, okay. Arnie, what's up, Arnie? London yes, that's what I was saying. If you're just now coming in, that's what I was saying earlier, is London is not broken, but this is where I use I don't use the snapshot of where we're currently at. I use the highest probable movement that we're going to do, and I bleed that into the daily profiler variable. So if London U is on the natural path of destruction, the path of where price could go, then I'm wanting to account for that ahead of time, because sometimes it's not super different, but sometimes it'll cause these high day and low day distributions to be a bit different. So I want to account for the highest probable scenario, so that way, if it is broken, I can account for it. So I'm accounting for London to be broken. I'm not accounting for Asia to be broken. If it does, cool. But this scenario that you see here is just London being broken. Daily profiler. Mickey says, I'm driving home, maybe jump on by market open. Yeah, dude. Feel free. Come on. Show them by day of the week, and then the 25, 50, 75 levels for settlement from 9:30. Yes. So we can see this right here. What Mickey is talking about. If we go to the daily profiler, We can see the RTH gap levels. Okay, that's what these are. So if we just wanted to know generically of all days, of all the regular trading hours, 4,499 trading hour days, we know that for 25% of the gap fill, it's about an 88% hit rate generically, 79, 71, 64. So we can see that because you hear all the time, right? People talk about the gap fill statistics. Like, statistically, we fill the gap X amount of times. Well, this is 100% of the gap, just generically about 65% of the time. And then 25% is about 88. And then on a Monday, if we look at today, because today's Monday, we can see in the past 880 Mondays, retracing 100% of the gap, 58%. So it actually drops off than what we generically do overall. We can also see 25% of the gap is 83, 50%, 74. Same thing for the times and everything like that. Then, if we want to get specific with what we've done in the day, we can see that with what we've done specifically in the overnight session on a Monday, we retrace 25% of the gap, 94% of the time. 50%, 88% of the time. 75, 80% of the time. All right, sorry about that. I think I'm trying to get a little sick. I had to mute so I didn't bust your all's eardrums coughing. And then 100% of the gap, 71%. And then again, the time drops off by 10 to 10:15. So what can we do with this statistic? We can see settlement right here. Let's say market opens, here's 9:30. Let's say market opens here. Let's say the market opens here. All right, so let's say this is the 9:30 opening price. So then TH gap statistics would be this yellow line being the opening of market open, and then Globex and settlement is right here. And then if we were to put like, I don't know, we could even put a fib on it to show you the levels like this. And so if the opening price of 9:30 is here, 25% would be here, 50% connection. And dude, I apologize guys if I just stop talking or I start to sound glitchy. My Wi-Fi loves to give me issues right at market open. It'll probably take like 1 to 2 minutes and then I'll be right back. But all right, so if the market opens here and then this element, this will be the 25%, 50, 75, and then 100. And so going back to daily profiler, I can just copy and paste this and put it on the chart. Given that it is a Monday, okay, given that it is a Monday, we have a 94.29% chance of just hitting this 25% of wherever we open, then 25% towards the gap. And then this significantly drops off by 75%. And then by this is 10 o'clock. So 10 a.m., 75% of the gap fill, which is here. So what can we do with this statistic? We can use this to not only give us probabilities of where price could go, but to eliminate the other side of the coin. So if this bid and the ask right here where price currently is, if let's say we keep on pumping, and boom, we open up here, and then this is the settlement right here. Well, we know by 10 a.m., if I use like the time tool here, 10 a.m., is the expiration for these high strike rate areas for price to go to. So then we can say, okay, well, if price opens up here, if 9:30 opens up here, and then we do something like this, where the market opens, boom, boom, and then it starts coming back down. Well, by 10 a.m., if we've only hit 50% and then we get back below market open, we can use those time statistics to tell us we may not retrace the full side of the gap. We may have only done what we need to do, in addition to an in statistic high of day and all that stuff, blah, blah, blah. So those gap statistics and what Mickey's saying there, this is why that's valuable, is we can see what portion of that gap between where the market opens and where the settlement is, and by what time do we retrace a portion of that gap. So that way, if we fail to do, let's say 75% by 10, and we start retracing back down to the downside, maybe that's all that we're having. We don't have to be biased towards a gap fill. Good suggestion there, Mick. What up, Rip? What up? Bowie says, like, or I'll steal your Christmas tree. Hey, shout out to Bowie. Bowie went live this morning for the London sessions. And again, they're always recorded. If you want to go back and see what our live London trader does, Bowie is our London session live trader for the Pack Trade Group. Good session today, Bowie. Hey, give me like 2 to 3 minutes. I'll be right back. Hey, we got 82 people in here. Let's get that to 100 while I'm before market opens. Let's go. BRB. All right, we are back. Let's see. So eliminate the short scenario. Another thing that I'll do is when we take New York 1 high or low, I always want to see if we actually extend away from the high or low instead of just wick it. So now that we've actually extended away from the high, I'm eliminating the short scenario altogether. And we can see for the long false high of day, we do have a long false high of day. So this is breadcrumb number 2. For those of you that were paying attention to my war game and my trade ideas in the pre-market, this is now breadcrumb number 2, where we have a high of day, not only generically within the 4 major times, but we also have the long false high of day time and distribution. Illuminati doesn't like. Yeah, dudes, I keep getting attacked by the Illuminati, the market makers. I get attacked by all of them. Trey says, when did I miss the RTH gap fill stats? I think we go over that in phase 2, right? Yeah, phase 2 when we go over just the daily stuff. But the biggest thing you can use for the RTH statistics, honestly, is they just show you, because, you know, it doesn't matter what variables you mess with. You can generically see that 9:30 to 10 o'clock. If honestly, if any of you all listening here, if you take any, I gave you guys the high day, low day generic statistics. Another very generic statistic that you could carry on with your personal trading and never even have to touch a spreadsheet, right? Is what is those statistics telling us? Those statistics tell us that by 9:30 to 10 is when the majority of the gap fills happen. That's it. Like, literally, if you came here and you just wanted to find any piece of value to just, I'm going to repeat this again. I'll show you all. If you can take anything away from this stream that you can just take with you and never have to touch a spreadsheet, never have to do anything, you can, obviously you need to go verify. But if I do all, and I just look at just Mondays or even just in general, what does these gap fill statistics tell us? These gap fill statistics tell us that by 10 to 10:15, we've dropped off dramatically, by especially the 75 to the 100% right here. That by 10 to 10:15, we definitely lose a lot of this high hit rate. And so we can take that with us into the markets. Right here, by saying that, okay, well, no matter the day, from where price currently is to the settlement, if by 10 o'clock we've only done 25% of that gap fill and we retrace back to the downside, I can have a good assumption that we're most likely we've done what we needed to do, and now we're most likely doing the opposite. So, really good discussion on that. Austin's Wi-Fi is like an old 56K modem. What's a 56K modem? I don't know what that is. I'm sure I'll get bullied for it. This price action could be juicy. Yes, sir. Works bit me over this boot camp. Oh, man. It's all right, dude. Listen, that's the beauty of what we do, man. It's the beauty of what we do. We can do this for the rest of our lives. That's another statistics do for us, right? Is they give us the ability to see that no matter if we miss a day, no matter what we do, they repeat tomorrow. What's up, Mickey? Just in time.
What's up, dude? I got to get my bearing. I went from driving 90 miles an hour to, hey, here's the markets. Enjoy. Just kidding. I drive 90 miles an hour. Here. Yep. The cool thing about a repeatable workflow and systematic trading is I don't have to really do much. All right. Dude, how was your Thanksgiving weekend?
Bro, it was amazing. I definitely, you know, when you're just like, you're constantly working and you don't know that you need a break, and then you finally get a break and you're like, I needed that break.
Yeah, absolutely.
that was me.
Yep.
How about you?
Absolutely. Oh, it was amazing. I was the same way. It was nice to not trade, not to do anything, just, chill. Not even care about the markets. Dude, I'm super nervous about our stats this week. I'm really nervous. Dude, from what I saw, from what I heard all over social media, they changed the algo. So I don't know if our probabilities are going to matter anymore.
They changed the algo.
Yeah, like they had some kind of halt happen on Thursday night. They closed down the markets. Doom and gloom. JP Morgan moved his silver's desk to Switzerland or something. Like, dude, we're fucked. Bring out the EMAs, because we got to go back to EMA trading. Our abilities are no longer valid.
Is that legit? Is that seriously something people are saying? That the algo is changing?
Yeah.
Oh God.
That's the cool thing about our probabilities.
God bless America. Oh my God.
You do any Black Friday shopping?
I did Black Friday hunt wargaming for Cyber Monday shopping.
Nice.
I'm trying to look for if anybody here has any like, I guess you could call it a functional fitness cage.
I've got
it's
one.
It's not a squat rack, because they have more.
No, I've got one for you. It's in my garage. I don't use it. I'll send you pictures. But when I come help you move, I'll put it in the U-Haul and bring it up.
No.
I'm
thinking of the Major Fitness one. That's the one that I was looking at.
Nice. I was looking for one of those those little leaf blowers that have like a little go-kart engine on it that because I want to blow my dogs around. I don't care so much to blow leaves around. I just want to blow leaves at my dogs and point it at my dogs and then go flying into the woods.
Okay, I completely I went dyslexic listening to you. For some reason, I pictured the opposite of what you said. Like, I thought you were saying I want a little go-kart with a leaf blower as the engine.
Oh, that'll work too. Like, how cool would that be? Driving around in a go-kart blowing leaves. All right, let's see how many days. How many days have we gone true versus false? Right, where are we in the variance game of New York 1? So let me see. Turn off that. Turn on this. So let's see. Out of the last 74 days, right, we've gone false 59%, true 40%. The max false streak has been 6 days. The max true streak has been 4. And guess what day we're on? Day 5 of a true.
Oh, we went true yesterday too. Yeah.
So we are at the extremes of that stat right there. So that makes a short that much even more juicier.
Yeah, I think especially with this high day too, man.
It's a high day. Oh yeah, the high of the day. Yeah, definitely.
Because we got hive today and long false hive day.
Mm-hmm. Oh man, that's money in the bank. Let's see if we net off of London OU, or if we're gonna go to Asia.
You want to share your screen?
Nothing's broken. Yeah, I can. Give me
Give the
a
people.
1
Hey,
minute.
we got 91 people. We need 9 more live viewers, and we'll break the 100 streak.
All right. So give me a 1 minute warning.
No, there you go. Oh, okay, I got you.
All right. So we see that the highest probability is New York 1 to go false, right? If you don't know what I'm talking about, join the boot camp. I'll teach you. All right. So we're going to select false. We see that London and Asia both have lower probabilities than normal. London has the highest probability of getting hit between 9:30 and 9:45. Asia, not so much, right? Coming down, looking at high of the day, we can see that there's a dramatic high of the day probability of where the current high of the day is. The low of the day, right, we have two modes, right? We have one here at 10 to 10:15 to make it low of the day and then do a range 1 style day, or it's going to happen in the day, right? We'll make that determination later on in the day that we get, but we can plant our anchor of that the high of the day is in, right? So now with that information, right, does price need to, we can see that there is a probability for us to come up to this London OU, which is playing around the previous day low, and then make the turn, right? Or does it need more? Does it need to come back to the P12 mid? I don't even have my settlement on. Let me put that on since we were talking about it today. Where's my settlement price? Weird. Oh, right here. Duh. Right? So settlement in Globex is all the way up here by Asia OU, right? We know that there is higher probability. From a distro standpoint, though, we've only got about a... All right, cool. So right now I'm going to be looking for market open to give us a buy, and then to see if we're going to net off of P12 mid, which hasn't been touched, or even higher, and then reverse, right? From a distro standpoint, right, we know typical price movement will get us to P12 mid, right? Highest probability go up than to go down. To sell, make a new low of the day, but I will be conscious of live price if it continues to pump, that we do have settlement in levels above us. All right, let's get this thing. That was my hasty analysis. Have fun with it. All right, market's open, and we're snapping up. See if we can go take out that London OU.
All right, for those of you that boot camp this morning, this is what I was talking about. Is first things first is I'm just measuring this market open range. So right now we're at a 0.13%, 0.14%, 0.15%, 0.14. So if we're at 0.15 or below, I know that my stop is already just arbitrarily going to be a bit smaller than if we do 0.15 or higher. I know my stop is going to be a little bit higher. And so this tells me, okay, well, if I'm 0.15 or below, I can open up my risk just a bit more. So like if we do get a good quality short to the downside, I know that I can open up my risk and say, hey, like now I can define my risk even more. Same thing for the upside. If we break to the upside, I have a cash flow potential, and that's pretty much it. But then if we break to the downside, that's my extended cash flow idea for right now. So if that's the case, then what I want to do is I want to position myself to take an extended cash flow short with, let's see, if we break to the downside about a 0.15 to 0.2% stop, I can give myself a really, really good position on that versus if the market open range was 0.2 or above, I'm going to have to reduce my contracts.
That's a really good size New York. All right. Right now I'm just waiting.
Yep. All right, we got 6 seconds left. We're breaking below. If we get it close here, I'll take this short.
Boom. Short.
Yep. Short. Stop will be at 285, 285.50. Cash flow, 4 contracts out at 0.1%. Right
Should
here.
be at 2255.
Yep. So 222.25 will be 0.1%, and then stop is going to be here at 286. This will give me plenty enough budget to pay for this trade three times max. Now, if we do this spike down, so if I get stopped on this spike down and then a break above, this is very, very subtle signature number 1 of a potential long true, even though we've went true a ton. It looks like I'm going to get stopped there, so I got stopped. So
Yep.
if we break to the upside now, I got slipped pretty bad on that trade too. If we break to the upside, this is going to be attempt number 2. But now that we failed to go false, we broke down, attempted to go false, but failed. A break above, especially by 9:45 to 10. If we stay above, this will be a potential true scenario. So we're waiting to see if we get this close. No close.
So for me, I'll take the breakout long. Right once we get it closed, because that does not confirm with the long true. So I'm a little bit more hesitant to take the long because I know it's time to reverse. But like, I'm just gonna be patient with this, right, and wait for the conditions for the breakout to be correct. Definitely got probabilities to the upside that'll push this thing. Now let's see if live price wants to push it up before coming lower.
Five seconds. All right, I'm taking that long.
Yep.
Taking 4 contracts off at 0.1 here at 324. Now this is not going to be, I'm not shooting for the moon here because again, we still have that false left open. So I'm going to take 4 off at 0.1. If we stay lingering above market open by 10 o'clock to 10:15, if I'm still in this or whatever, then that's even more potential of a true. If I get stopped out, so if this is an instant stop number 2, I have one more chance, and then that'll be it. So this is how I'm managing this trade. Long here, 4 off here, stop here at 254.50. And we have all these daily levels stacked here
Yeah.
as well. Another reason.
It's gonna be one of these days where we just don't want to go anywhere.
Hey, that's a real. We talked about that on stream this morning too.
We moved a lot overnight.
But these market open lows, the only thing that I would like, you can't have everything in a trade, but the only thing I would have loved here is if we went false and then broke above. But
Oh, that would have been cool. All right, London has been broken.
yep. Gunship's now setting up as well.
All right, I covered the queen for me right now at that 10 basis points, right out of the market open. A little bit lower, but I'm not really looking forward to hanging on to this thing too long. So I'm in runners right now because I am still expecting the falls to come in, right? My official target is 50% of this green box, which is the median MFE, which is 359. If I get stopped out, I am at risk for 300. Let's see. This is looking like he's going to do a 945 reversal. Obviously, my spidey senses are going off because we've had so many true days in a row.
Yeah.
Like, I am so cautious right now.
Yeah, I mean, to be honest, it can be either way right here. The major thing that I wanted to also give this long an opportunity is this P12 mid floating above. If we hit P12 mid in the pre-market, I wouldn't be counting on it as much. But if I do get stopped out of this, it'll just be one more attempt at whichever side we get, because I haven't even been able to get 10 basis points. So it's three max attempts if I can't even get this. If I do get this, so for any reason we bounce off here, hit the rest of these bullish levels, I get my 10 basis points. That gives me more budget to work with, obviously, but can't get more than 3 on even just a 10 basis point trade. That's my signal of I need to chill out. All right, we're losing 50% here. Let's see.
Yeah, so this is a very, very good signature for the reversal. Right? Can you make it up to the 30 percentile of the MFE of the 730 to 830 range? Lose it, right? We already got one of the 4-step reversals coming in. About to do 2. I will be taking this short.
All right, we got 20 seconds left on this break. This will be my final trade of the day. If I can't get 10 basis points.
So right now we're at jeopardy of a 15-minute doji, right, which is the weakness of the opening range. But let's see if we can break out right now and turn this thing false, which it looks like we're about to. Fucking lovely.
Yeah, this is the only annoying thing now is if we get this just a crazy breakout candle. This happens sometimes.
It
Just can't
is
on my
super
wrist.
annoying.
And 30 seconds left. $15 seconds. No close. That's why we wait for closes right there. We still have not went short or meant false
Nope.
off that little wick there.
She's gonna make them work for it.
All right, 30 seconds left on this candle. From a distribution and statistics standpoint, low of day still is not in.
Yeah, no. And you got
left.
you got 2 of the 4 steps of the reversals that's happening right now, so that's a good thing. Now let's see if we can get some follow through, or is it going to wait for the next 15 minutes to give the follow through? And that's why it's like important to like be able to manage your risk. Yep. That's why it's important to be able to manage your risk, because you could be in this trade, the move can happen, right? But it doesn't have to happen within that 15-minute period that you're expecting it to happen, right? So you still got to maintain that risk, right? You got to be able to hold that position, because like you still have 15 minutes that you have to bear any kind of position on.
I'm cash flowing 4 off at 218 or 215. There we go. Literally just got that.
I just got it mine too.
And we'll wait for 9:45. So we got 2 minutes left. Okay, so this is what I was talking about. So the third trade, and this is also just going even more into what I was saying earlier, guys. So we just went long false. This is where understanding the statistics of your edge really comes in. So I know 3 to 4 attempts. If we can't even get 10 basis points off market open off of the 3rd to 4th attempt, I need to stop. And so now that we got, at least on the 3rd attempt here, 0.1%, I got to pay myself off this trade. And so now this works into my risk of being able to, if I get stopped out, if this 0.1% move that we made now comes in and stops me out, I can now have enough budget to have a 4th attempt. If it was going to be an instant stop out where I can't even get 0.1% off this 3rd attempt, darn, it's a red day. But now that I've paid myself, now I got what Mick likes to call protecting the queen. Now that I've done that, now I can sit here and see, okay, if we're accepting below market open, we have a really good in statistic high, and now we have that long false high. Now that we've confirmed false for New York 1 by taking this low, we can see right here from both a time and a distribution standpoint, we don't have the low of day. Does that mean that we have to? No, we can be wrong. But now I know that if we're false for New York 1 and we don't have the distribution for the low, and we also don't have the time for the low, that now I can say, okay, if I get stopped out one more time, I'm on the wrong side of the statistics and the day, and I can't afford to do anything else. But then if I'm in this short and we stay short by 10 o'clock, I can start to let the 10 o'clock hourly candle give me signs of what I need to do. But if we just stay chopping and market open here, just a range 1 style day that I can't even get anything else other than this 10 basis points, and that's just it for me. And there we go. Final exit there. So now I have one more attempt at anything because I paid myself here, and we're going to try it again. And this is exactly the reality of what we do. Sometimes you'll see a clean move You guys that have been here before, you see sometimes we're in a trade on Monday and it's a clean one and done day. Other days it's just like this right here. And this is what a lot of people go through that they won't show you. And this is what we like to proudly show you. We got 2 seconds left here. See if we get a close above. We got a close above. I'm not going to mark it in and get slipped 500 points though. So we're going to watch this. Watch the trade that I didn't get to get into now.
Yep.
Well, if I don't get tagged in, I don't get tagged in, but I couldn't mark it in quick enough. Well, this would have been my trade. And that's pretty unfortunate if we don't get any pullback off that breakout.
At this point, like, I'm down, so I am going to wait till 10 o'clock, right, for me, and see what I can do for the 05 breakout.
God
Like,
damn, bro.
This is streaming range 1 signature. So
It's that fourth goddamn attempt, bro. Fourth fucking one. Look at that.
Yep.
Doesn't get me in. Son of a bitch. Well, that was it right there. Dude, I'm telling you, bro. It's every time you don't get tagged in, that's the ones that you're just like, are you kidding me?
Yep.
It happens.
It's just the nature of the beast. Yeah, we're just ping ponging off for the 10 basis points. Just ping pong. And so, like, for a lot of you guys, this should be like, you should be done trading. You might have, like, if you're only trading the 930, like, you're gonna have a red day, right? You don't have to rush. You don't have to, like, feel FOMO to make it all up today, right? That's how people go on tilt, right? There's no sense in that. There's no reason to go tilt, right? If you're down today and you spent your daily allowance, right? Like, it's just time to show up tomorrow and do the same thing. You know, you just had to pay a business expense today.
Just waiting patiently to see if this comes back, but I don't think it is. I think this is going to be the time that I miss. Austin, I'm curious, you took your limit off to get tagged. Well, I took my limit off because I thought we were just going to run now. But when we started coming back, that's when I added it back. There's no major strategy reason. I thought we were just going to go crazy. But yeah, I added it back when we got close because I thought we were going to come back and tag me in. But we'll see. If we take these levels, like we have a 92% here, a 71% here, we got the gunship active above. That's what these green lines are. If we take off without getting this, it's unfortunate. This is a very realistic trade. It's just the nature of the beast. Sometimes I wasn't going to mark it in and get slipped another because I marketed it. You guys also got to see why I hate fucking market orders. I went short here. I got 3 points of slip here. I went short here, got another 4-5 points here. So that stuff really does add up long term when you trade that way. And so I didn't want to get another 4 or 5 point slip here, market long, and then, run the risk of letting that also cut into my day. So either I get limited in here and then I can start using these levels to scale out and pay myself for the trade, or unfortunately, maybe this just goes without me. But yeah, that's why I'm doing what I'm doing here. Because I guess another little statistic with this market open move, the final countdown, the final chance, whatever you want to call it, of this breakout and the expansion off of market open is that third to fourth time. If we break out more than 5 times, it's more likely than not you're going to range and we ain't getting any sort of expansive move. But that's another reason why this fourth time, as long as I can get paid here, the first 3, this fourth attempt is a very real and valid attempt. Keep the overnight highs if you want to make some money. Yeah. Well, the P12 mid above was my home run, like shoot for the moon scenario today, which is right at 0.3% anyways off market open. So, P12 mid is a really good target. It's just, I don't think I'm going to be getting into it. Yeah, now we're moving even farther away. I think this was the trade. This was the trade, guys, right here. This is the annoying realities of fucking trading sometimes, is seeing everything hit and just not being able to be a part of it. So I'm just going to cancel that order. We're going to wait till 10 o'clock now, see what we do in the 10 o'clock hour. But this was that fourth attempt that I was really, really wanting to try to trade, because now I would have paid myself 0.1%. I would have paid myself another trade here. So we just hit the second one. And then my final exit would be P12 mid to here. So you guys just literally seen, this is the fucking trade that I was, and just could not get a little bit more of a pullback to get into that. So we're going to see in the 10 o'clock hour off the 05, do we get the 3-hour line or apex? I'll give it one more attempt off the 05 box in the 10 o'clock, but yeah, that's pretty annoying.
Yeah, but the lesson is like, you've got to wait. Like, your entry drill is just as important as anything. Like, and you manage your risk, and it's not about, did you get this trade? It's about, like, are you going to be able to sustain over the next 1,000 days, taking the same repeatable workflow and the same decision making? Would you be okay? Right? That's what it's about.
Well, I get annoyed about these because this is a part of
Mhm.
my budget and how I risk, and literally I just by the, me not getting triggered in, now I've messed with my personal expectancy.
Yeah. Good job, Mansky. I figure you saw that. Now we're trying to see, are we going to reject? Let's see. You fix this. The right time frame. Right? Are we going to reject an area where we rejected over the last 252 trades? When we break out of the 730 to 830 range, we usually reject right here, right now, over 60 percentile, 60% of the time. So now we're seeing, are we going to have an anomaly move and keep going higher, or is it going to bring it back into the range and bring us back into the 930? Right? We are rejecting P12 mid right now, so that's the thing. I think we got news at 10 o'clock too.
Yeah, we got a PMI, U.S. manufacturing PMI.
Oh, nice.
All right, 10 o'clock hour. Step number one, we took the 10 o'clock or the 9 o'clock high.
It sucks right back into the range. So we're above previous hour 50, above 930. This, if it continues ahead, if it breaks out like above previous day mid, then we're setting up for a possible DNP solid day, right? So which means each hour will stack on each other and not be so expansive, but they definitely will respect the previous hour 50s, all that, right? But we are in a high reversal area right now, so I'm just paying attention to like what we do around this O5 box as it develops. Does it continue to break out to the upside, and the 9 o'clock will be the low of the hour, or does it bring it back into the range, which would be more realistic for a range 1 style day?
All right, at this point, if we break above the 05 hour, I'll be looking for a continuation long. Dude, your dog is about to have a stroke.
My dog is sleeping like a baby. You kidding me? She's loving life. All right. So we know that the high of the day is high probability in, right? So only makes sense for O5 breakouts to bring us back into this, right? We have a out of stat high, low of the day. We have an in stat high of the day, right? We've already hit the extremes, right? For the upside move, right? So if we do, we can definitely break out to the upside. That's the lower probability trade right now, right? So right now the higher probability breakout is to the downside. 10 basis points bringing us back to the 930. There's still a couple of steps that need to happen for that to happen. Right now we'd be fighting all the momentum taking the breakouts to the downside. Even though it is the higher probability from a momentum standpoint, right? We're up, right? We're up from an H4, a 3 hour, all that stuff, right? Like an hour, 15 minute, all the momentum's up. So right now, as it breaks down, right, we're seeing, right, can it step below the 10 basis points? Can it bridge that previous hour 50, right? Which will shift which will be live price aligning with the momentum and the probabilities. If we can't do that, like we're doing right now, we can even break out 5 basis points to the downside without sucking back into the range. Then that will tell live price doesn't give a shit about the probabilities, and you can expect it to go higher. And I will join you with that long breakout. Right now, during the first 15 minutes of the hour, we're trying to see what instant high and low is it going to be, right? We're above previous hour 50. We can't get outside of the 05 box, right? So everything is pointing to us putting an instant low for the hour in, which supports the momentum that the 930 945 reversal gave us.
Yeah, I was wanting to see if we got a close above the open, but we still don't think
Yeah,
that
we still haven't.
was above.
No. 10 o'clock has a very phenomenal way of moving away from its opening price and then returning to it. You're going to get both dogs snoring now.
Correct me up. There we go. So that was the first candle. That was the first candle to close above the open. So let's see if we get follow through or rejection now.
Mm-hmm.
So we're at P12 mid too. So.
Yeah. We keep rejecting this mid like crazy. We haven't properly stepped above it and found footing on it.
Hey, see you later, Dave. Hey, bro. All right, close back below the open.
Yep.
If we get this close below, so now this will be the third close, I'll give a short. Stop will be at the other side of the open. Manage my risk even better in this. If we don't, then I'll just... Yeah, okay.
Yep.
Get back below.
When in doubt, sit it out.
Yep. Last minute close. Nothing for me.
Wait for the Q2 to confirm it. Condones. Boring. All right, dude. I think I'm gonna end it. I got a meeting at 10:30 anyway, so I'm gonna jump.
All right, man. I'm just gonna sit here and see if I get one more attempt. If not, I may be done too.
All right, brother. Later, man.
All right, later, man. Yeah, for myself, guys, like I said, I'm waiting to see if we clear this 05. Just a pretty annoying day, personally, just to like recap what I've done. So this is just the realities of trading. I try managing my risk even more in this long right here by limiting in instead of marketing in, because I got slipped 3 times marketing in, and then that attempt that finally gets the successful move that I was looking for, we don't get fucking a single ounce of drawdown. So that's just the annoying side of just what's going on in my mind, in my brain, as we're sitting here. But the fact that I was able to pay myself a little bit in this trade here, I have enough budget to give myself one more attempt at a trade. And really, this how we interact with this 05 box in the 10 o'clock hour is going to, give me, and right there. So we just took the high, starting out this 15-minute candle and breaking above the 05. If we get a close above this 05, I'll take this long for my just the final attempt at getting anything for either the continuation of this move. Stop will be the other side of the 05, and then that'll be it. And we don't get a close just yet. But the trade that I should have been in, that is 100% according to my plan, I should still be long right now with a runner, because like I said, this was 100% a valid break for a 0.1% break above, and then scaled out another position here, and then my final position, would have been scaled out around here. I'd be targeting these 2 bullish levels here as my final exit. So just an annoying Monday. Not every Monday that you guys get to see us do this is going to be fun and sexy. But damn, is it annoying. Also, another thing that I'm looking at right now, like another statistic, is both the gap, you can even call it the gap retracements, but also the Asia OU. So remember, we were talking about this in the pre-market here. The Asia OU and the gap retracements, both of these have failures by 10:30, 10:15 to 10:30. So 10:15 to 10:30, if we fail to get any more positive price movement to Asia OU to settlement, we can use these gap statistics. So show you all that one more time here. Here's the open. Here's the settlement. So far, we've done a little bit over 50%. What are you saying here? No joke. This is one of my first times actually watching the streams and you taking a trade. I wouldn't have wanted to have it any other way. This is such a realistic first. That's good. I appreciate that, man. I mean, this is why, like, it's dude, it's super annoying. Like, you guys will never hear me be fake. You know, you'll never hear me, you know, sit here and act as if it's not affecting me. Like, I think we would all be lying to ourselves if we don't just understand that losing is annoying. You know, like losing is a part of this, and it's annoying, but it doesn't control if I click these buttons up here. You know, these buttons on the top left have nothing to do with them needing to be clicked if I'm upset, right? That is when you go from being an amateur to an amateur to somebody that you want to treat this like a profession, is when your emotions don't dictate clicking these two buttons, the buy and the sell button. But it's still an annoying thing. And I think when you bottle it up, when you just tell yourself, no, I can't be upset about it, it only makes it 10 times worse. You know, because it's okay to be upset. It's just, don't let being upset be the reason why you're clicking a button. And for me, absolutely transparently, this was a long. Like I said, this right here, this close above was a long. And if you go back and watch the stream, I wanted to get long. I placed my limit order right here, and we just never fucking came back. And 3 trades, all 3 taking instant drawdown. The third attempt, annoyingly, took almost 0 drawdown. And the third attempt would have been the trade that brings me back to the net positive of the day, because cash flow would have been paid here. Another trade would have been paid here, and I would be sitting in a runner right now, maybe even breaking even for the day. Versus now I'm sitting here, you know, not in anything, waiting for if we get that continuation off this 05. And it's just, that is the part of trading that you all go through every day. The difference is you don't see me clicking this button out of emotion, right? You don't see me being like, well, let me just turn this bad boy to 100 minis or 100 micros and just, you know, spin the dice or roll the dice, whatever you want to say. So that's why I like live streaming. You know, you guys see all these people, you see all these famous people sitting here doing all this stuff. You see people posting cherry picked trades, screenshots and all this stuff on social media, but they won't show you this side. And everybody, no matter how you trade, everybody has these moments. That's why I like talking about them, because it humanizes us as traders, because that's what trading is about. Like, we're all humans. We're all trying to conquer ourselves. And so if we just sat here like a bunch of fake, you know, people, and was just like, nah, man, no, like, bro, this pisses me off just like it would piss anybody else off. The difference is not being upset. It's not letting being upset dictate clicking these buttons. That's it. That is the name of the game. That's the secret sauce. That's the cheat code. Whatever buzzword you want to call it, that is it. And so that's why I like it's very annoying. Very, very annoying. And hopefully, I would like to, you know, hopefully, if you see me go through this, yet I can still just use my discipline to say, no, there's nothing for me here unless we get a break above or below this 05, then maybe one day you can take that as inspiration for you to do it as well. You know, you may still be in a part of your journey where you're still succumbing to those emotions of being upset and letting that dictate your button clicking. But over time, you can say, oh, wow, there's a realistic dude on here having the same mistakes I go through. And I promise you, the people that have way more followers and way more subscribers and have way more viewers than what I'm doing right now, I promise you they go through it too. They just don't want you to see that side, because that doesn't get clicks. That doesn't get affiliate code uses. That side of the coin doesn't get the attention, because that's not fun. It's not what's entertaining. It's not sexy to talk about. That's the part that it's just not something anybody wants to talk about, because it's not fun. It gets glossed over. Diddy says, I just punch myself in the nuts before I push a button. Oh, man. Could you explain how you enter in the trades? I mean, that's kind of why I stream showing you guys me entering the trades. I'm not sure how else to explain it. Go back and watch. We got 5 seconds left here. See if we break below this 05. No break. No close. So a break below this 05 box, how I'm planning on taking this trade is if we break below, I'll look at cash flowing a portion of this trade out near the London OU in this previous hour mid right here. And then 0.1% of the 05 is here. So I'm really trying to position myself where whichever side we break of this 05, do we lock in the high, which we have right here? We have a high in Q1. A break below would give us a potential low in Q3 to Q4. And so I can cash flow my trade here at 0.1 to 0.13%, and then let the rest ride for if we come back to market open. And there we go. So we just break below. So I'm taking that short. Stop is going to be here at 0.18. That's going to be the max that I'm willing to spend on this trade, which is right at the other side of market open. .1%. I'm going to do 0.12. I'm going to take 5 off here at 0.12. And that way, if we now get this potential retest of the previous hour mid and the 0.1% off the 05, which is right here, then I'll be able to cash flow this trade, let the final 2, where I'll take 2 more off when we get back into market open if we do this apex style move. And then the other side of the coin, if this gets stopped out, this will be my final trade of the day. He doesn't. He usually gets not tagged. Yep. Well, like, see, Rip just spoke it into existence. You guys see my screen right now? Speaking of not getting tagged, look at that. I mean, you can't make this stuff up, bro. This is why we do it live. You got, like, you can't make it up. Literally tick denied. Dude. That's funny. You guys may get to experience every ounce of the annoying side of trading that nobody wants to show you all, but everyone goes through. Everybody goes through. You guys got to see me. The final trade that I just could not get any reason to get into would have been the trade of the day for me. Then with instant stop losses on 2 of the 3 trades, the third trade I got to pay myself. And then the trade that now we've set in consolidation waiting to set up now misses my cash flow trade, my cash flow portion of the move, to get the majority of my trade off, gets tick denied. And the thing that separates what I do versus an emotional trader, right, is it's not about getting upset. It's not about the person beside of you being upset versus not being upset. It's not letting those emotions click the button, right? As annoyed as I am, I want to send my face through the brick wall half the time. I don't let myself click the button because statistics tell me, hey man, as annoying as it is, we swiped around market open. That's more range 1 scenario. We failed to take the P12 mid above with a break below the 05. Statistically, we're due for a 0.1% move off of that 05. And guess what? We did it. But if I don't get that just little push, if I don't get this additional 0.03%, well, I'm just on the other side of variance. I'm on the side of the statistic that is right at that 0.1% and not a hair more. And it is what it is. Is what it is, baby. Now is the moment to go bananas with 100 micros. You didn't miss the TP, it'll hit. Well, Trey, I have a really funny thing when it comes to tick denies. And it's really weird because almost every time I hit these tick denies, it's like I have an even higher strike rate of my target being hit. And so I have this joke. I'm not going to do it today because I'm already 0 for 3. But typically, especially on my first 1 to 2 trades of the day, if I get a tick deny, I'll extend that TP a few more ticks because the odds of now that turning around is so much lower. It could still happen, but think about it. If I get tick denied and then it goes all the way back to not only my entry, but also my stop, then it was going to lose anyways. Like, let's just be honest. So that's another reason it's just like, I mean, it's important not to get stuck in your head thinking that the market's revolving around you, because that's another very big fallacy we constantly find ourselves in, right? Is, oh my God, of course, that's where the market has to turn around. But in all actuality, every single one of these wicks, somebody had a TP, right? Like, there's hundreds of thousands of traders in the world. Somebody had a TP right here. Somebody had a TP right here. Somebody had a TP right. Somebody had TP. Somebody got tick denied every one of these wicks, So it's very important to also understand the market doesn't really revolve around us, as much as we want to feel as if we're special, we're not. It's just variance. It's just happenstance. I knew you were going to say it at some... Dude, yeah. Well, now look, we're going into Q3. So now what can statistics do to give me peace on the charts, even though I'm annoyed personally, like emotionally? I'm in this annoyed state emotionally, but statistically, how can I still be brought to my mean? Well, I know that... Well, there we go. But I know that Q3... So let me change my stop real quick here. So I know that in Q3, we're due for a minimum, a new low. So that's what you guys just seen was about what I was about to say, is we have a Q1 high. And so statistically, we're due for now a Q3 low. So that was another reason why I was happy to have my TP right smack dab at that new low, because now Q3 has done what it typically does. So now I can come in and say, okay, we've done the highest probable portion of this move, of this break. We've now achieved that for this 10 o'clock hour. And now, because even more so, this is potentially the high with a new low either has already now been made in Q3. If not, a new low in Q4. I can say, okay, I have 3 micros left. I'm going to scale 2 more out at market open. Because now if we do this apex move, what's the next highest possible move? What's the next highest probable area if price is agreeing with this, what the statistics tell us? Well, statistics tell us at this point that we're now due, the highest possible low is Q4 for this hourly candle. And then where does that align with the price? Where does that align with where the market is? Well, if we're due for, in this case now, an apex, we either say a 3-hour line or apex. Well, in today, it's most likely the apex scenario. And the apex scenario is we make a high and then we come back and make the low. We make an A. That's why it's called the apex. And so the apex would give us a retracement back into market open. Well, then where and what time would we potentially retrace back into market open? Well, at this point, the retracement would make the most sense around Q3 to Q4, which is exactly the time period that we're in. From 10:30 to 11 a.m., we know that this is the final time to make a new low in this hourly candle. And then you're just thinking if then. If this is now due for a new low in Q3 to Q4, then market open would be on the war path, the path of destruction here, for us to potentially retest the previous hour mid and market open. So that's why my final 2 contracts are here. And then my final runner will be if we break below market open, I'll just take 0.1% of that market open break and extend it to here. Nick says, maybe I'm a C word for this, but I like watching your streams on these days. On the streams where I take a few losses. There we go. There's nothing wrong with that. I think you would only be a C word if you were like praying for my downfall. You know what I mean? Like if you were just like, boy, I can't wait to watch Austin lose, which there are some, for lack of better words, pussy ass little bitches on here that do like to pray for people's downfall just because they trade different ways than what you do, but that's neither here nor there. But no, like I think it's very valuable to see people lose. That's why another reason I like doing this. Like you guys get to see what a losing day looks like, how I manage risk. Because we all go through it. We all go through losses, man. But all right. So now my final trade will be, or my final position will be if we break below market open. I'll use a 0.1% projection off that break for my final exit because P12 low has still failed to be hit. To be honest, I'll just go ahead and put it right here. Still failed to be hit, P12 low, because we know statistically we do not stay inside the P12. We do not stay inside the P12 range. Typically, we will take one side of this P12. And so if we use the context of the day and we can see that we've rejected the P12 mid, we've now sucked back into the market open range, and we're making a bearish hourly candle, then we can sit here and assume that, okay, well, if we're making a bearish hourly candle, the lowest probable scenario now is to come back up here by 11 o'clock. And so we can think, okay, well, any pullback that we see is either an anomaly, an anomalistic price movement, whatever you want to call it, where we fail, like we make a low in Q3 and a high in Q4. We don't typically do that. And so that's another thing that statistics allow us to have peace on the charts. But the other aspect of the coin, the other side of the coin, is now the highest probable scenarios if we do come back into market open. and we break below market open, this P12 low is the final high time frame check mark of the day. All right. Do we have any other questions before we wrap it up? And for the pack trade group, we have ambiguous hour with PTFX and Cody. Thank you. Still red on the day. Like, don't get it twisted, guys. Still red on the day. If this comes back, I'll only pay like, I think $50 for this trade, but either way, the risk is managed. I just couldn't get the trade. Like I said, the trade that would have brought me to basically break even on the day would have been this move right here that I missed. And so now if this trade is successful, this will just, be icing on the cake. But either way, it's just a business expense day. Nothing crazy. Trey, since that 10 basis points is just shy of that low, do you ever extend it to the low when it sets up? Yeah. That's why, like, you even see right here, like I got my limit order here. Like if we come back and just make maybe this was a healthy pullback to just a higher low, whatever you want to do from market structure standpoint, well, darn, I'm on the wrong side of price, and my final stop loss will be against the losing team. But then the other side of the coin, if now we are confirming this apex style move, and because we're in this apex style range 1 style day, the odds of us expanding even more is the less likely scenario. And so then the other side of the coin is P12 low, because if P12 high is not going to get hit, then P12 low is the other side of the coin. Now we're dramatically outside of the time period to take the high and the low of the P12. So now by this point, it's just process of elimination. Process of elimination tells us by the end of the day, one of the P12 high or the P12 low has good odds of being taken. And so I'm just going with what is the higher odd now for the final micro. Absolutely, Rip. Thank you, man. Appreciate all the kind words. I'm telling you guys, sometimes this is annoying, bro. Like, I'm telling y'all, like, trading in front of people is sometimes it's the most fun, like it's great. You have you're riding the high of seeing people win, and you get to win, and it's all fun. But then the other side of the coin, it's very, very taxing mentally, because you're up here and sometimes you get the crap slapped out of you and you're like, dude, I'm just a straight fraud today. But everyone goes through that. And I think that is such a big, crucial thing to document when, dude, a day like today where I'm getting my cash flow targets, but I can't get the final follow through to save my life. Okay, great. This is the live environment telling me that today is not my day in terms of how I view price, the edge, how I trade, all that just is not conducive to the way that I see price. And that's fine. But that's where you increase the velocity of your edge by accepting that instead of trying to be perfect, instead of trying to be able to trade every type of market condition. Understand the types that is good for you, understand the days that give you the most edge, and just wait for those days. And let days like today, where you've seen me struggle, you've seen me, the first two trades I couldn't get 10 basis points. The second trade I got paid, or the third trade I took, I got paid, then stopped. Then the fourth trade that I'm in right now, I've gotten paid twice. Now I'm just the runner is either going to do the damage, or I'm just paying $50, $70, whatever this final stop is, and that's it. Right? That's just I can't get anything working for me. I need to just take it easy and wait tomorrow. And then tomorrow, guess what? Because I didn't let the emotions of today dictate my tomorrow, I have more velocity. I have more edge to be exposed to tomorrow. And maybe tomorrow is the day that the market conditions give me exactly what I need for my edge, and it's a one and done day. Or the other side of the coin, maybe I have another red day tomorrow. Maybe tomorrow is another difficult day. Well, because again, I'm not going on tilt, because I'm letting my risk management just do the hard working and the worrying for me. Then tomorrow I get to show up, and maybe tomorrow's the day. So either way, I just have to let tomorrow be available to expose my risk to, instead of letting today dictate if today's where I blow up or not. And that's what a lot of people, and hopefully at least a couple of people watching, hopefully you guys relate to that, because that is exactly what trading is. It is just making sure that the days that you're getting it and you're seeing it, you're maximizing to the best of your ability. But then the days that you are not seeing it, the days that you just do not have that follow through, you just laugh about it, get pissed off, go to the gym, sweat it out, do whatever you got to do, and then show up tomorrow. That's it. That's it, guys. That's the secret sauce. That's Enigma. Hope y'all, I think I'm going to end it there. I hope you all have a wonderful, wonderful rest of your day. Stay grinding on your goals, and never, ever let anyone tell you that you can't do something they never done themselves. And I'll see you all later. Bye, everybody.
And they know that they not like us. We ain't gon' do it. The only thing that can stop me and me, if you're doing it.